Well, I understand exactly what you're telling me, and I hear you. The only thing is, I disagree because there is a way to get qualified for a LowDoc business loan within 24 hours. The thing is, a lot of people believe you have to wait 7 days, 14 days, and what have you to actually qualify for a small, not a small, a LowDoc business loan in general. It could be small, it could be large. No, if you apply the hacks I'm going to share with you into this conversation, you can get approved within 24 hours. So, folks, I am going to speak to you about LowDoc business loan application secret that gets you approved within 24 hours. You want to listen to this conversation because you're going to love it. I guarantee it.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower that's stinging from the beat, but the rhythm's getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in a million, one in a million.
Welcome back, folks, to another edition of the Awesome Sweaty Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to speak to you about LowDoc business loan application secrets that get you approved within 24 hours. The first thing you want to really get is you need to understand what we are talking about. See, when we talk about low documentation business loan, a lot of people get confused. Not a lot, but some viewers asking us questions about, they ask me for this, they ask for my bank statements, they ask for my financial statements, but you only say LowDoc. Hey, boss. Hey. When we talk about low documentation, we are speaking about 2 or 3 pieces of paperwork. You got to give something. You're asking for a loan, and you're asking for a business loan, and you are asking the lender just to give you cash just like that. Think about it. You got to be real here. Let's be real. Have you ever seen anybody just giving you money for free? No, this doesn't happen. So you got to give something. So when we talk about that, we are speaking about, first of all, you have to understand, there are several types of LowDoc business loans. You can have short-term business loans. You can have LowDoc equipment financing. You can have business cash advance. You can have NoDoc business line of credit. You can have invoice factoring arrangements. So those are credit arrangements where the lender doesn't need a lot of paperwork from you, but they do need something. They still need something. And sometimes they will ask you for your bank statements. Sometimes they will ask you for your financial statements. Sometimes they will ask you to actually send them your business plan, but you gotta actually give something. LowDoc business loans in general are collateralized loans. In other words, you are basing the loan amounts on the underlying collateral. In some cases, you can have a LowDoc business loan that is a cash advance, a revenue-based credit product. Okay, so it is very rare to have an unsecured LowDoc business loan. In other words, you're just asking the lender to give you $100,000, and you are not giving them any kind of paperwork, whatever. This doesn't work. This does not exist. It does not exist. Do not believe anybody telling you otherwise on YouTube or elsewhere. So, big decision time, boss. Do you understand what a LowDoc business loan is? And are you ready to provide some kind of paperwork? Some kind, it doesn't matter what it is, but at least 1 or 2 pieces of paperwork. This is really important. The second thing you need to really think about when we talk about LowDoc business loan application secrets, you want to bank well. Make sure that you have business bank account. This is important. A lot of folks believe, I can just be without a bank. First of all, the question is, how can you have a business and not have a business bank account? What's up with that? Boss, son, daughter, grandpa, grandma. Hey, listen. Hey. Let's be real here. What's going on? What is really going on? You have a business and you have no business bank account? What's up with that? There is a contradiction here. There is a dichotomy, and we got to fix that. This is unacceptable. If you are in that situation right now, I want you to go to a branch and get your business bank account. I want you to get your procrastinating sorry ass out of the house right now, and I want you to open that account. It is unacceptable. I will not accept it. You can hate my ass, whatever, but listen, I'm telling you, I want you to succeed. I want you to get that LowDoc loan, and I want you to get a large amount. And you need a business bank account. You need it. Don't let nobody actually fool you. You need a business bank account. Okay, so this is important because the lender is going to look at your bank statements to actually see your account balance, the frequency and amount of withdrawals, the frequency and amounts of deposits. So they will try to reconstruct some kind of financial statements. So some lenders will not even ask you your financial statements, but they'll actually reconstruct your financial statements from your bank statements. And so they will pay attention to things like debt to cash flow ratio, debt to income ratio, your quick ratio, for example. And the thing here is that when we talk about bank statement business loans, you can also have those, and those are even LowDoc business loans. In other words, the lender is only basing their decision, their underwriting process on your bank statement alone. Okay, so it's important. It's really important. So you want to have that situation. You want to have that certainty of having a bank account. Okay, son, daughter, I really want you to pay attention to. I really want you to really do this. I don't care. I don't care what kind of situation you're currently in. If you have a business, you need to have a business bank account, especially if you are looking for low documentation business loans for a large amount. You need a business bank account. You need to get the right paperwork. Paperwork is very important. As I said before, LowDoc business loans require just 1 or 2 or 3 pieces of paperwork, but the exact amount will depend on the lender, the type, and the quantity of paperwork, the quantity of pieces of paperwork will depend on the lender, right? But here are some documents generally required in a business loan application, just in a general, okay? So this is FY only, because your LowDoc business loan will require fewer documents than indicated in this conversation. But I just want to give you in general what a business loan will ask for, so you can be prepared and see, do I have this? Maybe I don't have this. Maybe I can get this, whatever. So you are ready. And this is important. You want to get the paperwork because, again, a LowDoc business loan does not mean a no-doc business loan. It just means that you are receiving a reduced number of documents that the lender is asking you. So generally, a business loan application, they will ask you for your bank statements, for your personal and business tax returns. They might ask you for your business licenses and permits. And this is really important, especially if you are in an industry that is federally regulated or that is regulated at the state level. You need to have your business licenses and permits. You got to have your employer identification number. This is an important document that you'll receive from the IRS. They might ask you in some cases to have proof of collateral. In other words, if you are trying, let's say you are trying to buy a piece of equipment and you are trying to get a LowDoc business loan to qualify for that equipment financing deal, the lender will ask you to provide actually information about that piece of equipment. Okay, and they might ask you for your balance sheet. They might ask you for copies of your commercial leases. They might ask you to disclose other debt that you have. Okay, and they might ask you for accounts payable and accounts receivable agent schedules. They might ask for ownership and affiliations, legal contracts and agreements, your driver's license, business insurance plans, payroll records, incorporation documents, and other information. What I'm trying to say here is that you might think this is a lot, and this is a lot. This is only for a traditional business loan application. If you are going for a LowDoc business loan application, they will ask you for fewer documents. The next thing I want you to do, son, if you are listening to me, daughter, if you are listening to me, nephew, you are here too, niece, I'm calling you, aunts, uncle, everybody. Mom, Dad, I'm calling you also. You gotta be liquid. You gotta be liquid. There is no way around that. You gotta have some cash. You gotta have some cash. If you are looking for a LowDoc business loan, I'm not asking you to have enough money to be in a situation where you don't need the loan anymore, but you gotta have some cash. And there are 3 reasons for that. 3 reasons. The first reason is you are telling the lender that, you know what, your business is viable. So in other words, if they don't give you the loan that you are asking for, let's say you are asking for $250,000, but they just give you $50,000. You want to tell the lender that you could survive even with a low amount. That's the first thing. The second thing is you want to tell the lender that, you know what, I do have some money to repay you. In other words, they were thinking about repayment risk, default risk. So they're trying to cover their ass. So it's important to look at things from the lender's perspective. Okay. And the third thing that's so important in terms of liquidity, again, is for the lender to know that you have a bank account and that you are actually paying your other debts, your other financial obligations. Okay. So this is important. So this trifecta is really important. So I want you to be liquid, boss. This is my thing here is, and being liquid means that you are having a statement of cash flows that shows positive net cash at the end of the period. In case you're not familiar with the cash flow statement, it is an accounting report that shows 3 categories of cash flows. So we're speaking about cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. And son, if I'm talking gibberish to you right now, if you're thinking that I'm talking gibberish, in other words, you have no idea what I'm talking about, you want to actually speak to someone who understands what I'm speaking about. It can be an accountant, it can be a CPA, it can be somebody online, a freelancer and whatnot. So somebody who can really break it down for you in very simple, intelligible terms. Simple, understandable terms. Okay, so we are speaking about cash flow is important to lenders. Most importantly, those lenders that are going to give you a LowDoc business loan. Okay, and cash flow is calculated. There are several ways to calculate cash flow. I'm not going to get into details here because this is beyond the scope and the purview of this show. But just know that the bottom line is you want to have net positive cash flow at the end of the period. If your period is, let's say, 1 year, if you actually do your financial statements every year or your financial statements every quarter or every month, you got to have positive cash flows. Okay, and remember, there are ways to improve your cash flow and your chances of being approved for a loan. Okay, just make sure that you are constantly improving your accounts receivable collection process. In other words, you are incentivizing your customers to pay you earlier and to pay you on time, if not earlier. You want to have a situation where you are only engaging in activities that do not eat in your working capital, that your business is generating revenue at this very moment. So those are important things. The next thing I want you to do, and folks, we are still having a conversation about LowDoc business loan application secrets that always get you approved within 24 hours. The next thing I want to talk to you about is lenders. You got to familiarize yourself with lenders because we are in a specific niche here. Not every lender wants to venture into this field, into this sector. You're not going to have a traditional bank giving you a LowDoc business loan. No. You're not going to have a credit union approving you for a LowDoc business loan. No, this is not their purview. This is not their scope. But you can actually deal with online lenders. You can deal with alternative lenders, and they will take care of you. And I want to share with you 3 of them today who will basically take care of you. Okay, we have Clarify Capital. Clarify Capital is kind of cool. They want you to be in business for over 6 months. They want you to generate at least $10,000 per month in revenue, and they can provide, they want you to provide your last 3 months of bank statements, and they can actually grant you up to $750,000. This is fantastic. This is one of our favorite lenders. You also have a Payment Cloud, so they provide no-doc business loans. They have an easy application and quick turnaround. Okay, they can approve you within 24 hours. The funding amount for payment cloud is open. They will base their decision upon your revenue. They will look at your cash inflows and your cash outflows, and they'll make a decision based on your revenue and liquidity trades. You also have advanced points. Advanced point, what we love about advanced point is that the loan amounts are really flexible. They will they can fund up to $1 million. It really depends on your situation. So those are only three lenders here. Obviously, this list is not exhaustive. We have covered this topic on other shows, but the point I'm trying to make here is what you want to actually call those specific lenders who actually grant those specific types of LowDoc business loans. Okay, so money. Boss, I have a question for you. Are you currently looking for a LowDoc business loan? If yes, have you actually reached out to those specific lenders that I've just mentioned to you? If you have, this is great. Fantastic. I'll be right back right after this. Don't go anywhere.
Finest, young Mr. Killer, and call me señorita. I papi got me dreaming, my legs up on the ceiling. Oh yeah. I know when he come, he ain't never gonna leave. No. Hit it the night run, and that's the way I wanna be. So don't think I'm the one to won't ever be enough.
Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are still having conversation about a LowDoc business loan, and more importantly, the application secrets that you need to have so you can be qualified, you can be approved within 24 hours. Okay, the timeline here is 24 hours. We do not want to linger to just wait forever. No, we want to get approved real fast. So you want to seek eligibility. So the thing here is that not everybody qualifies, not every business qualifies for a LowDoc business loan, right? So you want to understand if your particular business, your LLC, your C Corp, your S Corp, your multi-member LLC, your single member LLC, your partnership qualifies for this LowDoc business loan. Okay, so there are a lot of criteria. So some lenders might ask you to have your business and personal credit scores at a certain level. Because, for example, a lender can ask you to say, I want your Paydex to be at 75 or your Paydex score to be at 80. So do you even have a Paydex score? That's another question for another day. But what I'm trying to say here is that you're gonna have to actually meet the requirements for personal and or business credit scores. You also have to think about your annual business revenue and profits. Some lenders will want you to have time in business. Minimum could be minimum 3 months, minimum 6 months, minimum 1 year or 2 years. You got to think about also your debt to income ratio. So the lender, again, will want to calculate your debt to income ratio. They might, they can say, listen, we are okay with giving you a LowDoc business loan, but we want to make sure that your debts relative to your income, your business debt relative to your business income, are not too high. In other words, your debt to income ratio is reasonable. Okay, they will also ask you to calculate your debt service coverage ratio. That's another ratio that's important. And you might have to provide collateral for secure loans. As I said before, a LowDoc business loan is generally a collateralized, aka secured loan. So this is really important. And just remember that your industry also is important. The kind of industry you're in, because the lender wants to make sure you are in a rosy, quote unquote, rosy industry, in a positive industry. The trends are positive in that industry. Okay, and the lender might also ask you to provide a business plan. So this is a constellation of documents documents. They may not ask you to have all this information, but they might ask you to have some of them. The last thing I want you to really think about if you are trying to qualify for a LowDoc business loan within 24 hours is to think about your FICO score. See, there is a strong correlation between a LowDoc business loan and your FICO score, because the thing, especially if you are a single member LLC or a sole proprietorship, or you are a single member S corporation. So basically, the lender is going to quote unquote confuse. And I'm using the word confuse here. Well, they will confuse your personal situation with your business situation. They were trying to merge those two together because they just realized there's no strong distance between your personal situation and business situation. So your FICO score becomes quintessential. Son, do you understand the point I'm trying to make here? The correlation is strong. So you want to have a high FICO score systematically. Okay, you want to establish a good credit score. I'm not saying that you have to have a 750 or 800. If you have that, that's fantastic. But even if you have a 600 or 650 credit score, that's still okay. You have to understand that a business credit score is different from a personal credit score. Okay, so when we talk about a personal credit score, the rating agencies are three: TransUnion, Equifax, and Experian. But when we talk about a business credit score, the agencies are still three. I mean, there are a lot more, but the three primary agencies are Equifax Business, Experian Business, and Dun & Bradstreet. Obviously, you also have SBFE, LexisNexis. You have other players out there, but those are the three. You have to understand that the personal credit scores range from 300 to 850, whereas business credit scores are from 0 to 100. At least the paydesk score. Okay, so the bottom line is what? It's important to understand that you want to have a good business credit score. In other words, you want to have something above 75 when it comes to your paydesk score. But most importantly, you really want to have a great personal FICO score also. This will have a strong correlation on your approval odds. Okay, so you have to maintain that. So my point here is that do not apply for a LowDoc business loan if you have, quote unquote, crappy credit scores. If you have crappy credits, don't apply. You want to wait you want to actually try to improve your credit score before applying for that kind of loan. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about LowDoc business loan application secrets that get you approved within 24 hours. So we spoke about you understanding the whole definition of LowDoc business loans. We spoke about banking properly, getting the paperwork needed. We spoke about being liquid, having liquidity, knowing the lenders that can actually grant you the loan that you want, seek eligibility, and know your FICO score. Very important. Thank you. I will see you next time. But until then, remember, stay marvelous.